What's up, gang? How we doing? Yo, what's up, Bandy White? What's up, crew? How we doing? Let's get busy. Let's get busy. So I'm going for the no strikes today. No strikes on YouTube vibe. So royalty-free meditation music. That's what we're going with. All right, that's what we're going with. So it might put you to sleep, but that's not half a bad thing when you're trading. Yo, can you keep voice in Discord? Yeah, one sec. There you go. Just make sure the sounds are working as well. Let's get some yeets. Ooh, that's quiet. Yes, sir. So that's what we do. Yeets, right? That's all we do is we eat yeets. We eat yeets. So, beautiful little trade this morning. Just as a little recap of where we are, what we're up to, where we're going, all that sort of fun jazz. So, for those of you who have watched the X levels video, which I released over the weekend, awesome. I hope you found it valuable. Of course, you can go down the rabbit holes and there's nuances to it, but as in terms of basic overview, those are the principles of X levels. So I hope you found it useful. No, that's not an echo, bro. That is genuinely the meditation music in the background, would be my guess. Yes, sir. I'm guessing that's what you're hearing. But today, literally just traded X levels. Right? Okay, so today's trade was purely based off X levels. Okay, so if you understand the principles of X levels, then you would have done 8 this morning. It's because you had Discord open as well. Got you. Both YouTube, yeah. Yeah, there you go. So this trade this morning, Tres Simplays, right? So you're looking for your higher time frame point of interest. As always, for me, we're up inside this daily upper quad. Why? Because I'm not anticipating this high to go pre-news. We've got consumer confidence at 10 o'clock today, right? So when there is no high impact news events to use as a catalyst to drive through high time frame dealing ranges, I should say, I often look for PD arrays up at those higher time frame points of interest around the highs of higher time frame liquidity, because to go short, because price doesn't have the catalyst, it doesn't have the volume, it doesn't have the institutions stepping in here to drive price through. Okay, so we have consumer confidence here at 10 o'clock. So up here inside the upper quad of this wick is where I was looking to see whether we could frame an entry short, and we did, right? And we did. So we had this range up on this high. So you're always wanting to stack your high time frame points of interest with X levels. So high time frame point of interest here is the upper quad on this daily wick. And what I will say is, because it was raised this morning, it's valid to raise that these high time frame points of interest right here. Okay, so I'm not necessarily looking exactly to the tick on the daily, right? Because the daily often gets slippage on these highs, right? So if we took this this point from on Friday last week, you know, if you're looking to go 70.5 out the discount side, this hourly dealing range, you know, if you were going banging at, you know, 86.50, which is 70.5, well, it actually went out at 81.50, 81.75. So you always want to start on your higher time frame and then dial in your entry as you go down on the lower time frame. So up here on the daily upper quad, we had here mitigation on this range on the hourly. Okay, so mitigating this range is up at 976. So it's up here where I'm now looking to frame an entry to go short. So you can, if you want, go hyper aggressive on your turtle suit once you see it. What you're always looking for, you're looking for the old right? There's your trigger. Yeet. Not going to go into too much detail about that on YouTube, but yeet. Okay, so there's your little trigger, and then you're looking for your break of market structure. Aight. So if you go and look at your 15-second chart, if I just move this for a second. That's not 15, that's the 5. Let me grab my 15. Okay, so if we look at this 15-second chart, so this is up. Oi, hello. This is up on this high up here, right? So this is where I'm starting to dial in my entries. I'm looking for either to enter aggressively on the TS, which I usually am, but I'm looking for the breaker structure. So I'm looking for the high that puts in a new low. I'm always doing that. I'm always looking for a swing low that puts in a new high. So this low right here, which put in this high, was your swing low. This low, which put in this high, was your swing low on the 15, so your range. So when you broke here, you had a breaker structure on the 15 seconds. So automatically I'm now going, okay, well, we've got a breaker structure on the 15 second up at a higher time frame point of interest, right? So it's here where I'm looking to go short. Okay, so up in here, this is where I'm framing my trade. So I'm looking for my trigger. You've got your turtle suit with the S, bosh. Okay, so now what you're looking to do is look at your 1 minute and your 5 minute dealing ranges, right? So, okay, you break on the 15 seconds. What should you be mindful of? Your 1 minute dealing range, guys. Your 1 minute dealing range. Let me just sort out my camera. It's gone there. It's gone dead. It died on me. It died on me. You're looking for your 1 minute, right? Okay, so where's your 1 minute? Okay, so you've broken on the 15. Where's your 1 minute? 1 minute discount, 1 minute premium, 1 minute discount, 1 minute premium. Okay, if we're breaking out of the high on this 1 minute premium, what can we look at? The 5. Right, the 5. So in this instance, it's this swing low which puts in a new high that closed above that high. So again, same principle. The 1 minute is the same as the 5 minute. That often happens where you have the dealing ranges which are the same. It can happen with the 5 and the 15 as well. So they can often be the same. So this we know is the 1 minute is the same as the 5 minute dealing range. Back down to a discount. So if we go to our 5 minute, does price close below that low? No. So it remains our 5 minute dealing range, right? So what can price do if it's just wicking below? Well, it can go all the way back up into a 5 minute premium. But what is here to be supporting price for price to do that? Well, X levels on the 15 minute dealing range. So if we go to our 15 minute dealing range, this low is put in this high, right? The premium side are X levels, okay? The premium and the discount side of any dealing range. So right here, you had 79% on the premium side of that 15 minute dealing range. So you have broken the 15 seconds, you've come down into a 1 minute discount, premium, discount, flirt, premium, 15 minute, and this is all coming back down to this 15 minute, right? Premium side. On the higher time frame, what was this? Pretty much to a tick. 70.9 on the premium side X level, right? So you've now come back down to a higher time frame point of interest. What did I say? Higher time frame points of interest always hold more weight than the lower time frame. So if you're breaking on the 15 seconds, reverse engineering at a higher time frame point of interest, you want to know where the higher time frame keys are. So where are those X levels? Well, 79% on the premium side of an hourly dealing range is a X level, a higher time frame point of interest. So in here you'd be looking for your PD rates. So I said to the guys this morning during London, this is where I'm taking off my positions. I'm taking off positions. I still held runners, and I'll tell you where I went out, but still holding positions. So why could price come back up here? Well, this is when you want to start analyzing price, right? Okay, so you always want to know where mitigation has and hasn't taken place if you're anticipating consolidation, okay? Take notes. So up here, up on this range, up on the 15 second, this range was unmitigated, i.e. price not returned back to 50% of that range. Okay, so if you draw a fib across this range from here to here, you can see price come back and mitigates that range, right? So when price was down here at the premium side of the hourly higher time frame X level, where can it go back to? Well, it can go back up into a 5-minute premium and mitigate this range. So I said to the guys, I'm paying myself here because price can go back up and mitigate this range on the high. What did we do to a tick? Come back, mitigate this range back up into a 5-minute premium. So what is this piece of price action called? What is this called? Right? If you're anticipating lower prices, what is that piece of price action called? Anyone on YouTube? What is that piece of price action called? And you guys, you'll get sick of this. You'll get sick of me saying it, but the more we repeat it, the more it'll go into the medulla, right? So offset accumulation, exactly, right? So we've come out of this high time frame point of interest, running those who are trading their stop above this high and inducing retail into believing the market's moving higher, okay? But context for us would suggest price is not going to do that because we have high impact news events at 10 o'clock. And that's when you would anticipate, if it were to happen, which I don't think it will, for price to drive out the high time frame dealing ranges, okay? Not without news, not without a news catalyst, especially on a Tuesday after a bank holiday, right? Unlikely. So price comes all the way back up here, mitigates this high on the range. Okay, so now you're up here back inside a 5-minute premium, offset accumulation, sweeping this liquidity. What do you now have on this high? What do you now have on that high? Right? Another turtle suit up on this high into mitigation into a 5-minute premium. Okay, so where could you be looking? Where could you be looking? So now you're anticipating distribution. Where could you be looking? Well, for me, I was looking for like the 62% on the premium side right here. This was my terminus. 62% on the premium side. 800 bucks this morning just trading that. Bosh. Thank you very much. Simple as anything, just using X levels to deliver it. Simple. So simple, right? This is where you're looking to frame in your dealing ranges. So I went off at CE of this SIBI. Okay. So you've then also got to be mindful, okay, so where could price draw down to? And this is where you want to start overlaying your other things that we teach inside bread pills, schematics and what have you. So coming back down inside the London range, right? And you're also looking for your divergences on the low for where price could be driving towards. Okay, so we had this dump. I didn't capture any of this. I got out here anticipating it to consolidate at fair value of the London dealing range. It didn't. It just dived through. That's cool. So how can we utilize this now? All right. Well, if we are anticipating lower prices still, which I am, because we have a divergence on this low still, right? So we still have this low on NQ, which is still not being ran. Whereas if we look at ES has ran it. So we've now got double divergence. And as we know, we always want NQ to do the turtle sitting. All right. So this is where we could start applying my other models to start navigating price. Well, first and foremost, utilize X levels. So what do we have above a 15-minute? So this range here was the previous 15-minute range, all right, which is technically actually still the 15-minute dealing range, this low to this high. Why? Because we haven't closed below it and we haven't closed above it. So this is still our dealing range, all right? Now, if we just remove this to the side for a second, just so it doesn't get complicated for you for viewing, we could also look at the 5-minute, because this is now put in a new 5-minute dealing range, right? So let me just clear this trash up here. Let me just clear some of this. Oi, oi, oi. OCD's kicking in. Right. What can we look at? We could look at the 5-minute dealing range. So this high, which put in this low is your new 5-minute dealing range. So same principles. The low, which puts in a high, is your dealing range using X levels. Okay, so this low, which put in this high, is your dealing range. All right. So what did we do here? We came back up into a discount side of the 5-minute, inside of a discount of the 15, inside of a discount of the hourly. Okay, so price is super heavy. What is it likely to do? Go out of the discount side of a higher time frame dealing range, right? So inside of here, utilizing X levels, this is where we can start framing our secondary entries, right? this low on the 5. Okay, so what does price do right here? It comes down to this low, but what does it come back up into? Into 70.5 on the discount side of this 5-minute dealing range at the lower quad of this hourly SIBI. So if I just remove this quickly, okay, back into lower quad of this hourly SIBI. Okay, so higher time frame point of interest, X level. So PD array, X level, helps you dial it in. What else do we have at this specific level? Well, this is my M5 continuation model, right? So this is where you're looking for your lower quad for continuation. So you've now got stack confluences using X levels to dial in your entries. So right here, hands up, I missed my entry by 2 ticks, okay, on this secondary entry here. Not bothered, didn't chase it, but I was looking to go off 35. It went off 70.5 X level, okay, which is on this lower quad of this hourly SIBI. Okay, so what's worth noting right now, that obviously we're building up res on this high, relative equal highs, and we have divergences on the lows. So we still have this divergence that I'm anticipating price to go and drive. All right, so the same principles are true that we can start now utilizing on these lows. All right, so this is where I'm now looking for price to drive back up into a premium. Why? Because we have this 1-minute dealing range. Has it been broken? Has it been broken? Has it been broken? Have we broken above? Have we broken below? No. So this is still your 1-minute dealing range. Okay. Down on this low. Now this low is nothing to me. This is complete and utter no man's land, right? So this for me is all engineered liquidity on the low. What I'm looking for would be a higher time frame point of interest on the low for price to go and drive into, okay, as a price target if I'm anticipating price to drive out these lows, which I am still, because we have that divergence with ES on the low. Okay, so this on the daily is the daily wick quad. So we have the upper 50, lower quad. So at the lower quad, higher time frame point of interest, start dialing down on the lower time frame in terms of what PD rate do we have in here to respect price. Well, we have an unmitigated range, and we also have this little 1-minute breaker block right here down at 904. So currently I'm anticipating price to want to flirt on this low because I am utilizing context, and context suggests more times than not, when price gets down to a higher time frame low or high, it's likely to accumulate when there is no high impact news, right? 9 times out of 10, it's going to do that. You're going to get up to the high and just consolidate, right? So we flirted with this low, and now we have this 1-minute dealing range, right? Why is that our 1-minute dealing range? This low put in this high, break of structure, low, high, break of structure when we got back up into a 5-minute discount. Break of structure. This is our high that put in a new low that closed below this low. So this is still our dealing range. Okay, so until this closes below, or a candle creates a low, a swing low that puts a new high that closes above that high, this is still our dealing range. Okay, so you can see how price is just going fair value, discount, premium, discount, premium, discount, fair value, premium, right? Consolidation. I'm anticipating, what I'd like to see for me to re-engage price, get back up into the 62% on the premium side of this 5-minute dealing range. So up at 39, and we also have the discount side of the 15-minute, which is still intact as well, which is up at 41. Okay, so for me, if I was looking to go short inside of a higher time frame discount, I want to be at the buck stop, right? So where would that be? So up here we'd be up inside 62% on the discount side of the hourly, and we'd also be right at the edges of the discount side on the higher time frame, so on the 15 and the 5. So inside of here is where I'm dialing in my PD arrays for a short, right? CE on the daily, hourly 62% inside of this hourly SIBI. All right, chances are it's not going to be the lower quad, but it's going to be the potential for institutional order flow entry drill. All right, so that will get you up to 41.75, right? So again, another higher time frame point of interest up at 41. So for me, if I was looking to frame a short, this is how you start piecing it all together. So yes, you have your X levels. Your X levels are there to help dial in your PD rate that you frame a trade off. Okay, it's absolutely right that price could still melt from here because this is a 15-second intermediate term high, as Jamal clearly pointed out. We've come back into the rejection block, and now it's just doing offset accumulation before distributing down. It can go from here, but I'd want to be in right on this high. Already have paid myself, holding runners. I don't want to be entering in here, driving down here without having already paid myself. I prefer to wait for a sweep of this liquidity to then drive price down if I was going to re-enter. Okay, so at the moment I'm waiting to see whether price gets up into 41 for a potential short to drive us down to this unmitigated range, or if this is still intact, for price to get down to this unmitigated range to then look to potentially drive price back up. Right, so where we are right now is consolidation. So if you've watched or read, I should say, my latest Twitter post, which was about institutional sponsorship versus institutional order flow, well, being able to read institutional order flow would help you depict whether you are inside of a buy program or a sell program. Now, for those who are even remotely educated in trading, does this even begin to resemble a buy program or a sell program? Even the slightest? No, right? So there's absolutely no point looking at this price action going, ooh, yeah, baby. Ooh, get me in some of that. Give me some, right? What is this? What is this? And yes, if you're a scalper, if you're in the lame crew, you can do this. You know, take it from a premium back down to a discount, back up into a 5-minute premium, back down to what you can do. All of that shit. It doesn't interest me. It doesn't get my socks off, right? It doesn't get me juices flowing, right? I just want to get in a trade, deliver, make $1,000-$2,000, walk off, let retail get chopped to pieces, right? Prime example this morning: get in, get out, enjoy the Chopsville retail. Right? So exactly, time distortion. So what is this? The potential for? Well, it's potential for first phase accumulation inside of a market maker sell model, right? So first phase distribution into accumulation. What would you anticipate after first phase accumulation? Well, you could anticipate manipulation for distribution, right? Context. So price, of course price can, because we have the reasons for it, go out from here, this 70.5 on the discount side of the X levels on the 5-min. Yes, it can. But I'd want to have already been in here paying myself, and I missed it by 2 ticks. I wanted 35, right? It went off 70.5. I wanted the actual quad level, missed it by 2 ticks. So paying myself, holding runners. I don't want to be entering in here when there's a potential for price to go and manipulate in wider accumulation before distributing down. All right. Now, that's not me saying I'm not anticipating lower prices, because I am, but it's just a professional trader's viewpoint on how to approach the markets. I have no interest in entering here. If it goes and drives down to that target from here, awesome. Amazing for those who are in on this intermediate term high on the 15 up here. Awesome. All right, couldn't be happy for you. But for me as a trader, I want to be in up at the very frigging turtle suit. And if you can't do that, and if you can't get in here, and then if you miss it, just go, oh, what? Just wait for the next opportunity. Then we're not cut from the same cloth. We're different traders. If you like your 2022 or your secondary entry trash, be my guest, right? Go elsewhere. But for me, I just purely want to get in on the turtle suit on the very high and then sit pretty with virtually no drawdown 99% of the time. That's my trading style. My trading style is to eradicate risk, right? I have no interest on taking on risk, because that is my job as a trader. So for me, if price delivers down to my target where I actually know where price is going, I'm 100% okay with that. 100%. Okay? 100%. Don't ever get muddled. 100% if price drives down to my target. Could not be happier, right? Because what it does do is it's supplies confidence into, I know what I'm doing, and I do. But secondly, it builds discipline. Okay, because for the 3 or 4 times that you enter in here and price delivers to your target, the other 6 times price goes and runs the high. Okay, so you're by doing that, this approach where you're taking some which are strong, some which are weak, you're just reducing your ultimate, your long-term consistency and your long-term profitability. Okay, the reason why my profitability is so high, my risk to reward is so high, and my win rate is high, is because I'm goddamn patient. Okay, and I don't get trapped into trading inside of accumulation, even though we can trade it, can absolutely trade it. It doesn't necessarily mean I have to. Okay, and there's the stark difference, knowing when to trade and when not to trade. All right, so for me at the moment, what I'm looking for is for price to get up into the discount side of this 5 minute, up at 41 for a potential short, or looking to bounce off this breaker block mitigation to drive price back up. So whatever comes first. In here, no interest, 0. Okay, I've already made $800 this morning. No interest in starting to chip it away, giving money back at this stage. Okay, so the reasons for that: context. What is the context? We had a bank holiday on Monday. It's the first day back in the office on Tuesday. We've had a bit of range during the Tuesday London session. So we're down at this higher time frame low on the hourly, anticipating consolidation with the high impact news event coming in at 10 o'clock. Right? The context would keep me at bay from being aggressively wanting to trade. Okay, so that's where I'm at the moment. So either looking for longs out of here or shorts out of here. But this entry here is my M5 continuation model, for those who are wondering. Okay, so the M5 continuation, if you have aggressive displacement, look for your M5 SIBI, and then look for the lower quad for your entry. Okay, so then you're looking to obviously for continuation, for price to continue to take out the lows. So why am I so confident on the lows? Well, we have this divergence. Okay, so whenever we have a divergence with ES and NQ, and right here we have a divergence with ES and NQ, okay, because this low has not taken out this low, right? It double bottomed, but it didn't take out this low. We now have a divergence, okay, here. So we still have a divergence when NQ came down here because it didn't take this low. So when ES puts in a new low, we now have a double divergence on this low. Okay, so I'm anticipating price to want to accumulate, potentially, ideally for me, to get in for a secondary entry, manipulate above this accumulation to then want to drive price out to take out this divergence on the low. We also have further divergences down on this low, down on this low. We also have further ones down on the lows lower down, right? But for me, all I'm looking to do is take the low-hanging fruit. The low-hanging fruit, baby. And if you want to hold runners beyond that, be my guest, okay? But that's my current POA at the moment. Who we got? The Metro. It's the Metro dude. Many thanks for your X levels video. You're more than welcome, bro. You're more than welcome. I hope you found it useful and valuable, and you learned something from it, and you can actually apply it. Because it's all well and good learning something, but unless you can apply it, it means nothing. Right? You've got to be able to apply it. But it's very, very simple X levels. They're super simple, and they're there to help you dial in your PDRAs and keep your eyes on order flow. Okay, so they support order flow, and all you're looking to do is get to your higher time frame point of interest and then reverse engineer price. That's all you're looking to do. So you're going down onto your time frame and then looking for your lower time frame aggressive entry into that higher time frame point of interest if you trade turtle suits like we do. So this would be your entry up on this high, aggressive entry. Or you wait for your breaker structure, go outside of a premium on the 1 minute, hold for a 5 minute. If you break the 5, go down to your 15. If you break your 15, go down to your 1. So this is a textbook example of an X levels in action right here. You had a 15-second break of market structure, 1 minute discount, 1 minute premium, 1 minute discount, and the 1 is the same as the 5 here, by just give you an indication. Back down to the 15-minute 79 up at the hourly 79, all the way back up into a 5-minute premium to mitigate the 15-second range. Bam, distributes down to a 15-minute premium and continues all the way down to a 15-minute discount. Where do we get accumulation? Down at 79% on the discount side of this 15-minute dealing range. So the 79%, which also coincided with being 70.5 on the hourly dealing range. So you had stacked confluences with X levels, right? Then you have this new 5-minute dealing range put in, and this is where you're then starting to apply context. So if price is looking to distribute lower, you could look for your continuation models. One of mine is M5 continuation model. So you've now got the discount side of this 5-minute dealing range inside of a 15-minute discount, inside of the hourly discount. Well, if you are anticipating heavy prices, you would anticipate price to go out of the discount range of the higher time frame dealing range. It doesn't necessarily always need to come back to fair value the whole time. It doesn't have to do that, especially if price is heavy and it's distributing aggressively to a higher time frame point of interest, right? So M5 continuation model, 70.5 on this 5 inside this discount, inside the 15 discount, inside the hourly discount, looking to continue to drive out the lows. So if you're in off my M5 continuation model, you've paid yourself on these lows, holding runners to drive out the divergence on the low. But as mentioned, right now, I would not be looking to enter in here because you're entering inside of a accumulation. Right, you're either in at the high or you're in at the low. You do not enter in between the 262s, which would be essentially inside this range. No interest whatsoever, your liquidity. So what I want to see is ideally price to run this high, take out these highs, get back up into the discount side right in here for distribution back down to that low. That's currently what I'm looking for. Or for price to get down into this low to then potentially drive back up into this high. Right, because at the moment, if we look at this hourly, we still have this hourly dealing range. This is still our low, this is still our high, this is still our premium, still our discount. So until we have a new low put in, so a swing high or an order block's the nuance, that puts in a new low, this is still our dealing range. Okay, so price can keep coming back all the way up into here. It can come down, it can flirt, go all the way back up into this hourly discount side. Until that low goes and puts in a new low, that is your dealing range, right? So on these lows, right, wick's doing the damage, right? Body's telling the story. We haven't closed below this low. Could start looking to frame PDRAs on this low for price to pull back up into this range. Okay, so why would price respect this level on this low? Okay, so why would I be looking in here? Okay, so first and foremost, higher time frame point of interest, lower quad on this daily wick, mitigation of this range, breaker block on the 1, right? With the idea that we have relatively equal highs for price to come and wick down to then go and drive out those. So even if price then decides in the PM or later to continue down, it's driven out that short-term liquidity, right? Equally, if it decides to go and run this low and leaves all this intact, to then look for price to drive out this low, right? Drive out this liquidity and just do the opposite. So go and take out that liquidity on the high, right? So that's currently what I'm looking at the moment. Guys, if you wouldn't mind smashing a like, it means a lot if you do find it valuable. If not, what are you doing here? What are you doing here? There's plenty of other streamers you can go watch. But if you want to share the love, be appreciated. And also, just to let you know, in 2 days to go, this little puppy, right? This little book of sauce, 183 pages of utter sauce, which is my new book, will be released for pre-release. So if you want to get yourself on the pre-release list, which is going to be in the next 2 days. Be my guest. Just go over to the community tab and follow the link, fill out the quick little questionnaire, and you'll be sent an email when this little puppy goes on sale. All right, so looking forward to you guys reading it. Entirely up to you, whether you do or you don't. I don't mind, but just little heads up. Thanks to those who have liked. It's appreciated. It's appreciated. $10.66. So if you look at this high here, you've got ES, which is now suiting the high on NQ, right? Which would give me the heebie-jeebies, or at least provide context for if price does continue melting here, for why price would want to go and reverse back to take out this high. You've got a divergence up on this high now. And up on this side. So this is known as what? What are we currently inside now, RP? Ripper. What are we inside now, RP? SMT tag, baby. SMT tag. So what do we do during SMT tag? What do we do during SMT tag? This is way in the wrong spot. Drink coffee. You can go there. You can go there, little book. Exactly. Wait for one side to get taken, play the other. Drink coffee. Oh yeah, baby. So what did everyone get up to on the bank holiday? Did you get up to much? What a win for Man United. Absolutely beautiful result. Absolutely beautiful result. And there we go. Distribution down to this low. You went to the cup final? Get out of here. Get out of here. Where did you did you really? That's friggin' awesome, bro. That's awesome, dude. Did you buy tickets in advance, or did it do? Was it a last minute thing? I'll share a video in a sec in advanced. Oh, bro, you lucky bashed. You lucky bastard. Martardo. How was the atmosphere, dude? Was it pim pim? Is it good or what? Let's see. Bum, bum, bum. I'll show you. Yeah, oh dude, it was such a good game, right? Absolute beaut of a game. Loved every minute of it. Are you Ten Hag stay or Ten Hag go? Where's your allegiance? Ow. Really? Why? Why do you want the old Ten Hag out? What's Ten Hag done, which you don't like? The guy's won, you know, two trophies in 2 seasons. You know, he's been working with absolute trash. I think he's a top manager. He's finished 8th, mate. He had like he didn't have a team. He didn't have a team to put out. You got to be fair to him. Every single time he's had a full squad, they've performed. You can't say they haven't. They have. But whenever you've had like Maguire centre back with Lindelof, we've been found out. For me, I'm stay. I want the dude to stay. I think he's all right. You know, just look at Arteta, for example, right? Just look at Arteta. You know, Arteta was pretty trash his first season. Look at Ferguson; he was trash his first season. He almost got the sack. Make sure you pay yourself, guys. Here, if you went long off that level, which I was talking about, just lock in your P. Lock in your P. Back at fair value on this 1 minute dealing range. Lock in your P's. Lock in your P's. Let's have a look at this 5. So So this is where it's okay. So here's a prime example. Okay, so you've now got a new 5-minute dealing range. Okay, so this high, which is put in a new low, which is closed below this low. Okay, so this 5-minute dealing range is now invalid. So what you'd want to ask yourself, okay, let's go to our 15 as well, make sure that's changed. Yeah, so 15 is now invalidated as well. Okay, so what you want to ask yourself is always, okay, so where is price going? Where the fuck is price going? Right? It's always what you want to ask yourself. Where is price going? Okay, so if we are breaking out of ranges, where are we going? High time frame point of interest. What are we going to do? Reverse engineer, right? Right. We're going to look for our low time frame point of interest. Bosh. Inside of a high time frame point of interest. And we're going to work back through the ranges. Okay, right? So this 1 is the same as the 15. Sorry, it's the same as the 5. This little range here. So I think it's actually the same. I think they're all the same. I think the 15 is the same. Oh no, the 15's up here. Let me get rid of this shit. Oh yeah. Right? Pay yourself here. Okay, so you now know that you're inside of a 1 minute premium, inside of a 15 and 5 minute premium. Would this not be a logical place to pay yourself using X levels? Okay, 15 minutes premium. Right? What's price likely to do? Come all the way back down into a discount again. It could even carve through the low. So if you're looking to drive price up to take out this high, pay yourself inside of a premium and hold runners. If you only have one contract, you pay yourself inside of an X levels premium. Right? If you don't do that, you are an absolute dodo. Right? You're a dodo. Okay? You're just going to follow everyone else off the cliff. You're going to hold your runners and you go, oh, stupid. Right? And you're going to end up extinct. Burnt out. Another burnt out trader on the fire pit, right? Pay yourself inside of a goddamn premium, and if you're big enough to hold runners to drive out the high, right? Inside of a now 15-minute premium, right? So what did the price has gone and done? Outside of the 1 minute discount, what did you have on that very low with ES? What did you have on that very low with ES? Oi oi sabaloi. Right? So, well, the level I spoke, 904. I'm an aggressive trader, bro. I don't wait for nobody. I'm not waiting for shitty little breaks of market structure or that trash. I use X levels, mate. X levels and higher time frame points of interest. That's how I trade. I have no interest in your OTE snozcumbers. So yeah, what I was talking about is this lower quad on this daily wick at mitigation inside this little breaker block on the 1 minute. Bosh. Right? There you go, guys. 903, back up to 22. There is your 904, wherever you went in, even if you went on that little suit on that low. Bosh, guys, there's your 20 handles. Right? 800, 400 bucks, one contract. Enjoy it. One and done, baby. A little bit of patience. Could you have traded this short up on this high to this down to this low? Abso-fucking-lutely. Did I miss my tick by entry by 2 ticks? Abso-fucking-lutely. Does that mean that I wanted to jump in here to take price down here? Absolutely fucking not. What did that mean I could do? Well, I could now frame an entry along to go and drive out those highs if I've got the context to do it. Do we have the context of price to go and drive out the highs, guys? Red pillars. Elite traders unite. Elite traders unite. Do we have the context of price to drive out the high? Yes, sir. Right? So you'd want to pay yourself whole runners to take out the high. Okay? And if it doesn't do it, okay. Fine, but you have the context to do it. What is the context? X, well, you have this divergence up on this high. You have a host of relative equal highs. These are all now mitigated. Okay, so if we have mitigated highs, what does that create? What are mitigated highs? If highs are mitigated, what are they? Relative equal highs, right? creates relative equal highs. So what are relative equal highs? They are sus highs, right? They are sus. That would be relative equal lows, my guy. Rehes. Relative equal highs. So who's bago-tagoed this morning on that little trade? Who bilboed? Anybody? Diggy. Are we eating or are we eating? Are we eating or are we eating? I'm eating, so I'm gonna eat lobsters on myself. Bring out the lobsters. Posh. Yes, sir. It's what we do. It's what we do. Called ahead of time. Gave you plenty of time and warning in advance what I was looking for. All you got to do is press the fucking button. Right? Way ahead in advance. None of this hindsight bullshit. I teach in hindsight, so that's the only way you can fucking teach. But calling price life. Right? Exactly where we're going long. Exactly what I'm looking for. Right? Rambo, let's have a look, broski. I can't believe you went to the game. That's fucking unbelievable. I bet the atmosphere isn't caught on that camera as well, right? But the atmosphere was nuts. Both City and United down in London at Wembley. I mean, I can tell it's a full time. They're not celebrating the game's just started, are they? Fucking Diego Dallo's down on his knees celebrating the, the whistle's just blown to start the game. Did you buy the advance? Did you buy the tickets before you knew it was City or United, or did you just luck out with that game? If you lucked out on that game, dude, that is a fucking score. I got them through the club. I'm season ticket holder. Oh, you're a season ticket holder at City or United. Oh, wow. Yeah, but cool little week of football. We had our little sponsors, our little sponsored team, Northamptonshire, no, gosh, who we sponsored them. Hampshire Schools FA, that was it. Not Northampton, Hampshire Schools FA, doing an incredible job on their tour of Madrid. So proud to have sponsored those guys. They wore the badge with proud. And then we had United winning the FA Cup. Yeah, bosh. Yeah, bosh. So again, little tip. Never enter in between the 262s. Just never do it. Never enter between the 262s. If you ever enter between the 262s, you've got liquidity stamped on your forehead. Yeah, it's the SMT you want though, right, Jamal? It's the SMT you want, broski. The only thing I would say is that just below that you have continued divergence, right? So all the way down here, down at 91. So if price decides to continue melting out of this discount, this premium side on the 15, sorry, the discount on 15, premium on the 1 and 5, you'd be looking for price to come draw this low. However, I'm still holding runners long, just looking to see if we can try to take out these rails. If it takes out my position, I don't particularly care on my runners. Already taken the lion's share off, so. Boom, boom, boom. So that right there is mitigation on the 15-second range on that low. Right in here is mitigated that range on the 15-second. Let's have a look. Getting another little $200 if you took that long as well. It's a fucking gold machine, mate. Guys, if you can just keep it in YouTube, it'd be appreciated. I genuinely can't keep a track of everything. Discord and YouTube, because I have all the stream stuff covering the Discord. That would be appreciated. Let's go, baby. Let's go. Who wants a little one and done before the open? Let's go, baby. Yes, sir. So for those of you who are interested, my runner is up at for 42. That's currently where my runner is set. So 42 is my terminus on my runner. Only 12 likes, you shysters. I'm gonna go back into my cave. I think that's what I'm gonna do. Go back into my little cave, little red pill cave. Beautiful little long this morning. If you caught this before the open, what more do you want? Am I allowed to hold through the open with Apex, or do I have to exit before the open? Well, this is what I mean, dude. With Apex, it's grey. If it's not something you do consistently, you're going to have a hard time arguing the fact. Right? This is why I don't trade Apex anymore. Like, if they want, they can turn around and say that isn't your usual strategy. And you'll turn around and say, well, I can't prove it because I don't trade like this all the time. So they'll be like, well, you violated our rules. We're going to take that off your account. So it's up to you, bro. But Apex is dead. It's a dead firm. So just holding runners to for 41, long off 04, paid myself inside of a premium. Price has come back, mitigated the 15-second range. Just looking for price to get up to 41. If it takes out my runners, I don't particularly care. I've already paid myself. And if price does get up here, then you could look to frame a short up here. So you'd be back up at 50%. So fair value up on the hourly at C of this daily wick is where I'd be looking to frame a short if I was looking to hold a short to come and drive out these lows. Yeah, I'd like to go on Top Step TV. Give him a little shake up. Teach him how to actually trade. Whenever I watch, and this is no dig on Top Step, I love Top Step, right? In terms of their platform, how quick they are with payouts, blah, yada, yada, yada. Their inbuilt platform with TradingView, awesome. But whenever I watch Top Step TV, I don't know about you, but I feel like I've just walked into a library. I feel like I'm just looking at librarians. It's like a group of librarians just sat around discussing the book of the week. Fuck me, it's boring. Oh yeah, it's the inflation data suggests that price might be going down. So yeah, we're gonna have to look at this week to see how it materializes. But yeah, if we look at this trend line is suggesting that we might bounce. We've hit this trend line 3 times. Then, Karen, what's your thought? Oh. Yeah, I agree with you there, David. I think that's a great analysis. That inflation data is definitely one to look out for on Friday. Yeah, I think also we could look at some potential GAN lines up on the high if price were to break out at the open at 9:30. Yeah, what do you think, John? At the moment, I'm just waiting to see where we are in the PM session. Yeah, back to you, Carl. Okay, guys, just to let you know, we're gonna have a release on Top Step. Shut the fuck up. The fuck am I watching? Librarian channel. What am I on? Library.com. Show me where we're going to get into a tick. Show me where we're getting out, right? Make me fucking money or piss off, right? They do none of that. Book club dweebs. That's what they are. Book club dweebs. Not us. No. We're getting in on a very fucking low. We're going to pay ourselves in a premium. We're anticipating price to come back down into a discount because these are motherfucking X levels. And then we're going to hold runners to take out the high because we've got SMT up here. And we're going to look to take out these relative equal highs because these highs are now relative equal highs because they are all mitigated. Right? And we're going to target 40 goddamn 2 as our runners, and that's where we're going to terminate. That's where we're going to go yeet, and that's where we're going to sit on our lozzles where we watch retail and Top Step TV talk about fucking resets. We don't reset. We print. Right? We don't reset. If any motherfucker comes to me and goes, oh, do you know Top Step are doing their little giveaway? Giveaway for what? Money? Are they giving away money? Then I'll tune in. If you're going on fucking Top Step TV so you can hang around in Library Club so you can get a fucking reset password, go and look at the mirror and go sort myself out. What the fuck am I doing? Right? Lame. Dweeb. Right? Your job is to make money. Make money. And that's what we do here. We print. Chat with me. We all on board or not? Top Step, don't dig me. I'm never gonna get on Top Step TV now. I've just killed it. I've literally just killed it. Top Step, I fucking love you, by the way. Top Step, just know I absolutely love you. Right? We have a great working relationship. Right? Mr. Patank. You're my home slice. Right, all of you and Cuss's support. You've been super helpful with my book. Right, I'm with you. Right, we're all in the same boat. I'm just having a little bit of fun. Mr. Michael Patak, my home slice. Right. We're all going the same direction. We're just going there at different paces, right? That's all it is. You know, some of us have got jet engines strapped to the back of our boats, whereas some of us are sailing in a little catamaran, right? We're on the speedboat, right? We're creating wakes and waves. But Top Step, I will say thank you because your logo is on my book cover, so it's all love, right? You'll forever be on my first ever book. Right, who's printing, by the way? I feel like I'm talking to myself again, and it's weird. I hate talking to myself. Let's just go to... Anybody else printing? Who else is printing? Who else is printing? Who else is money printing? Oh, dear, oh dear. So you now got the premium side of this higher time frame dealing range. So the premium X levels. So price can support inside this premium and displays higher. That's it. So that's it. Just a little $3,400. Just a little something. Just a little something. Just a little something. What am I doing here? Losing on my chart, my screen's again. Yeah, right, Jamal, I'm gonna ban you, mate, if you're talking Discord once more. I can't keep up with it, bro. I'm sorry, bro. I'm gonna have to time you out. It keeps shifting all my screens about. Dump it in YouTube or just write it, type it. But yeah, really well done. Really well done. Nice. So I'm holding runners for 42, alright? And that's going to be me. Wham, bam, thank you, ma'am. So I shorted off this high using X levels back down to a 15-minute premium at that point in time. Who wants to go over this morning's trade again, or do you just want me to keep quiet? Am I giving you a headache? I don't want to go over the short this morning. So I shorted this high using X levels back down to a 15-minute premium. That was my short this morning. Paid myself here, which was that 15-minute premium side on the X levels. Back up into a 5-minute premium, mitigating the 15-second range. Distributed down to 62% on the premium side, down at hourly 79%. Price distributed, M5 continuation model. Looking to get down to our breaker block. Mitigate breaker block. Looking to get down to our breaker block at mitigation inside the lower quad, flipped it, gone long, paid ourselves in a premium, holding runners to get up into this M5 Sibi. There you go, there's a quick little recap. Printing, baby. Oh, that was stupid, wasn't it? That was stupid. Get off my screens. Get off my screens. So just holding a runner for 42. If that happens, I'm going to be dumb, baby. All day, every day. All day, every day. I'm fighting myself from falling asleep listening to this meditation music. And that's why I'm talking so much. Just to fight myself going into a sleep mode. Anybody holding runners with me for 42? Anybody holding runners with me to 42? Who's in this boat with me? Who's in the speedboat? Who else is in the speedboat? Steve-O. Go on, Steve-O. Time to shine, baby. Time to shine. Rambo. Where'd you get in, Rambo? So if we hit 42, I've hit my daily goal before the open. Yeet. Yeet. Andy White's holding. Our resident meth dealer. Oh, Walter White. Yeah, Walter White. I had a one mini from the low, took 10 handles and re-entered with micros on 15-second mitigation. Good man. Oosh. Big dog. Go on, son. Get some. Welcome to the Bilbo Baggins stream, by the way. If you've never come across this stream before, welcome. But all we do here is print. That's generally what we do. Called ahead of time to the exact fucking tick. No breaks of structure. Nonsense. What we're doing, let's get a some... Yeet, yeet! Yeet, yeet! Yes, get some! Rebecca L. Who is Rebecca L? You got the same name as my missus. What's your surname? Are you my missus in disguise? What's going on? What's up, Rebecca? Where are you hailing from? What planet are you coming from? Oh, Rebecca R. You're coming from the land of R. Okay. Crazy shizness. Fourth, AP, you're gonna have to jump into YouTube if you want to get some answers and that sort of stuff, mate. Oh, where's Rebecca going? Rebecca, no! Rebecca, no! Best behavior, folks. Yeah. You're in trouble, boy! I wish he was. I wish he was. 15-second SMT. Do you guys have a whole nother monitor to track that? I just trade off whatever my execution charts are. My execution charts are set to 15. They're set to 15. That's what my execution charts are essentially set to. Aight. So that's how I do it. So if you might need a different monitor for that. Alright. So still holding runners up for 41. What did I say? If price is bullish, where's it going to go out of? Where's it going to go out of, baby? Where's it going to go up? It's going to go out the premium side of X levels, right? So where you can start hunting for your PD arrays if you wanted to. It's hyper aggressive this early, this close to the open, but you could have done so, right? If you wanted to. 15-second range. So if you actually go to your 15-second chart, this is a 15-second low that puts in a new high. So you break structure on the 15-second, but what do you do? You're just coming back down into a 1-minute premium when you're anticipating higher prices. So if price is bullish, it will go out the premium side of a higher time frame dealing range. So the one is risky, right? Going out of a 1-minute premium is risky. I'm not saying you can't do that. You can, but it's less high. I prefer, if I'm going to do it, I prefer to go out of a higher time frame premium. After accumulation, manipulation, first phase distribution, then you could look for your high time frame premium to go out of consolidation. So that being said, the 1 here is the same as the 5, so this is actually technically a 1-minute premium as well. A 5-minute and a 1-minute. So these are 1-minute and 5-minute X levels. This is a 15-minute X level, so the discount side, right? 15-minute X level. So essentially what you're doing here is you're bouncing between a 5-minute premium and a 15-minute discount. That's what you're chopping between at the moment. What I'm looking for is for price to expand, paid myself, mitigation, offset accumulation, looking for it to go and drive out into 42, take out these rails. Now it might with it being the open, you have to be mindful that it might just want to go and rip the low. You know, it can do that. But if you want to hold runners, and you're holding runners, 42 is my current target. It can also come all the way back down into a discount again before going. So holding into the open is risky, but I'm holding. I'm looking for 42, baby, and that's going to be me done. And you've now gone from 904, bottom ticking the range, taking 40 handles. Before the market's even opened. Yeet. Has anybody got any questions? as we get into, we're 3 minutes away from the open. Has anyone got any questions they want to ask? Yay, nay, maybe. Yes, no. Yes, no, maybe. Alright. It's fun, isn't it? Double top on the high. ES putting new highs, further confidence for higher prices. Don't forget you got consumer confidence at 10 o'clock. So this is where your volatility is coming in. Right? Alright, we got 1 minute to the open. Buckle up. 10 seconds. Don't feel like you have to jump in. If you're not in on this low and you haven't paid yourself inside this premium, don't feel like you have to chase price. This is stupid. This is what I'm talking about. If you trade the red pill way, you're either in at the low or you're not in the trade. If you missed the trade, you missed the trade. You weren't good enough. Unlucky. Right? Unlucky. Suck it up. Right? If you're going to try and chase price inside of here at the open, when you haven't got when you've got reasons for price to run down back into a discount, and you've also got price to drive out that high, you are essentially in no man's land, right? Are we getting yeets or are we getting yeets? What we doing? What we doing, fam? What we doing, fam squad? Are we eating or are we eating? Are we eating or are we eating? Posh! Eat some! Eat the haters, guys. Eat the haters. Notice how that went into the lower quad, 35, whereas previously it dipped it by a wick, and this goes right into the lower quad. So let's have a look at the 5. So again, still the same 5-minute dealing range. The 5-minute dealing range has not changed, not closed above or below. So right now, price can do anything. It can it can continue carving now if it wants. I'm not really asked. So what did we go in terms of X levels? What have we gone back up into here? Hourly 62, M5 continuation model, right? Lower quad. So if you're looking for continuation, lower quad. Stop goes above 75% in an M5 continuation. I'd still personally like to see high prices. Still want to see the upper quad tagged, but consumer confidence at 10. I'm looking for price to continue, right? Macro today. So my first goal was to get price to take out the relative equal highs. We've now done that. So now it's a case of looking towards these lows, right? So now I'm looking to frame entry short to come and take out that low. I anticipate they'll wait for consumer confidence to do that. So whether price wants to come all the way back up here for a short, which was my initial target. By the way, I took off my contracts here at 35 when we got this little pullback. We didn't get 41, so I closed it. I'd either like to see price get back up into 41, 42 for a short to take price down, or I'm just going to sit out. Yeah, it's going to go now, so it's fine. So this on this low down here is a poo. This is a poo. What do I mean by poo? Point of origin. So right underneath that liquidity. So don't love it. Good screens. So if you look at it, this low, that's the actual divergence it's taken. Bum, 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 da, da, da. Yeah. So it's fulfilled both objectives now, right? So we've taken these rails out, like we were talking about, and we've taken out the divergence on the low. That was our draw. Okay, so what has price now done? What has price done? What has price done? Fulfilled its objectives, exactly. So what do you do when price fulfills its objectives? Once it's fulfilled its objectives, what do you do? Exactly. Sit still. Watch retail get chopped up. You know, you've taken your trades, right? If you trade me this morning, you've taken over 80 handles, right? You don't need to trade in the trash, right? When price fulfills its objectives, you sit on the sidelines. So absolutely monster day this morning. For everyone who's joined the stream, I hope you've managed to bag some. Let's do a little poll. Let's see who's bagged this morning. Don't forget to like the stream. Go on, live your life, my G. If you've bagged today though, do consider giving it a like. It means a lot. It does mean a lot. We're here to take down the furus. That's what we're here for. That's the only reason why we come on YouTube. Take down the furus. And to give those who are not inside Red Pill Uni or Red Pill Trading a little bag, right? Come out and distribute bags. We're like Robin Hood, right? We come out, Prince of Thieves, bosh, give people a load of money, then fuck off again. That's how we do it. Bagged around 5k. Yeet! Live your life. This is what we do, sir. This is what we do. Out of X levels, fair value outside the discount side of this 5 minute, right? So you can see here we wicked the high into the M5 continuation model, lower quad on this SIBI, took out the low, wicked both sides but didn't close, so we still have this 5 minute dealing range, right? So if you drop back to your 1, wicked out the high, wicked out the low, fair value. So guys, bags 3k. Get some. 100% bago tagoed. That's what we like to see. So guys, I'm going to call it here on YouTube. I hope you've had fun this morning with me. I've had an enjoyable time anyway. Over 80 handles this morning from London through to now. So I'm going to go jump back into Red Pill. Trade the rest of the day in the session. We're obviously on a bit of a meltdown here. And I'm not in a trade, so I won't be chasing this. I'll be waiting to see if we get a London close reversal or see where we are on the PM session. So I've taken my AM session trades this morning. Not looking to be on YouTube just to entertain trades, just for the sake of taking trades. It's not how I am. I'm here to make money. I'm not here for the ad revenue. I couldn't give a shit. So my trades are complete this morning. I'm bagged. Hope you're bagged with me. We've called price live as usual, and we'll do it all again on Thursday, no doubt. So just try and give you guys a key. Honestly, this will get all the way back down to this daily discount, so all the way back down to 18,730 today. So I wouldn't be wanting to go longs again. I'll be looking for shorts. 18,730 would be my doll. Come and take out this junk on this low, this hourly low that we have down here. So guys, that's going to be it for me today. That's my trades. I'll catch you all soon. Until next time, abosh! And take care of yourselves. Have good trading days. Peace.